You're welcome back to study section 14 on HG 302. In this study section, we shall discuss the financial statements. A financial statement or financial report is a formal record of financial activities and position of a business, person, or other entity. Therefore, a balance sheet or statement of financial position reports on a company's assets, liabilities, and owner's equity at a given point in time. So at the end of this study section, you should be able to explain the meaning of assets and liabilities. You should be able to discuss the meaning of net worth or net capital. And lastly, you should be able to explain profit and loss accounts. I will be talking on these learning outcomes one after the other. Assets and liabilities. Assets is anything of value possessed by the business or any claim to value or possession to others. In agriculture, farm assets refer to all materials, that is the goods and services, being owned by the farmer and is used in the production process. Assets could be classified into fixed, working, and current assets. So in farm business, liability is being referred to goods and services which the farmer owns to others. Liabilities are usually classified into long-term liabilities, medium-term liabilities, and short-term liability or current liabilities. The best possible measure of capital position of the farm at a given time is shown by the yearly balance sheet. So the balance sheet shows the assets and liability of the farm business at a specified point in time, usually the last day of financial year. Net worth or net capital. Net worth or net capital is the amount by which total value of assets exceed the total number of liabilities within a period of time. Therefore, it implies that net worth value is calculated from the balance sheet account. In farm business, net worth or net capital is used to determine the overall performance of a farm at a given period of time. Net capital shows how much the business worth if it has to be sold at that point in time. Also, it is the best possible measure of a farmer's financial position, and it grows in a direct measure of the growth of the business. Also, net worth shows a glance whether or not a farmer is credit worthy. Therefore, net worth statement is only very useful when compared to the past values. The previous values will show whether the farm business is progressing or not. The accounting ratios that can be obtained from the statement of balance sheet includes net worth capital ratios, working capital ratio, current capital ratio. Net capital ratio is being represented by NCR. Working capital ratio is being represented by INCR, while current capital ratio is being represented by CCR. Net worth ratio is a measure of degree of safety for the entire business. It is the ratio of total assets to total liabilities. Therefore, the greater the figure above 1, the safer the farm business financially. Number 2, working capital ratio. This is also known as intermediate ratio. It measures the degree of financial safety of the farmer over an intermediate period of time, like 1 to 3 years. Current capital ratio. This measures the ability of the farm to meet current financial obligation. Therefore, it measures the degree of solvency of the farm business. Profit and loss account. The ultimate goal of any business is to make profits. One of the best ways of assessing how well the business is progressing is by preparing a profit and loss account for the business. So we have 3 essential components of profit and loss accounts, which are total products on return, total expenditure, profit or net farm income. Total product on return. This is recorded as income or receipts or credit, profit and loss account. It is the income obtained from sales and other sources together with the valuation on hand at the end of the accounting period. Second one is total expenditure. This is recorded as faces or expenses or debts in a profit and loss account. It is the sum of the expenditure items and valuation of the input resources at the beginning of accounting period. The last one is profit or net farm income. Net farm income is the amount by which the value of total products produced in the accounting period exceed the value of total resources used during the same period. That is, the profit is equal to total value of products minus total expenses. Therefore, it is regarded as profit if the total value of products is more than the total expenses. However, it is regarded as a loss if total expenses are more than the total value of products. Profit or net farm income. Net farm income is the amount by which the value of total products produced in the accounting period exceed the value of total resources used during the same period. That is, profit is equal to total value of products minus total expenses. It is also regarded as profit if the total value of products is more than the total expenses. However, it is also regarded as a loss if total expenses are more than the total value of products. You have come to the end of this study section 14, financial statements, and I hope you've learned one or two things from the video section. Kindly go over the case study materials for more understanding and deep explanation. Kindly go over the video sections from the beginning, from the study section 1 to the end. Thank you for listening.